and they've just been so bad the past week. So with like the trees moving and everything. Yeah, but I haven't. I feel fine. It doesn't hurt yet. I don't have like any other symptoms. But if you see me like sweating,
like it.
Wish our Betsy was coming.
it might be like
yeah. And then she's not coming, so we.
Have you gotten yours already?
It makes more sense to have you all you up.
Yeah, I don't know.
It is
On my list
interesting when I think
quickly.
we had
My wife
three
is like
crammed in here.
has been. I'm like, I'm good now.
No.
Good afternoon, everybody. This is the Wednesday, May 5th, 2021 joint workshop with the Scarborough, Maine Town Council and Board of Education. There's one agenda item today, and I'll share the screen real quick. Our one agenda item is a report from the auditors on the municipal and school audit. I believe we'll receive a presentation from Mr. Christian Smith, and then we will have a Q&A session. Before I continue, I'll take quick attendance. Tom, could you take attendance for us?
Certainly. Councillor Clucci.
Here.
Councillor Anderson.
Here.
Councillor Gleistein. Councillor Gleistein.
She's here.
Okay.
Yep.
Councillor Hamel.
Here.
Councillor Katarina.
Here.
Councillor Johnson. Here. Chairman Johnson.
Here. Okay, with that, Mr. Hall, do you want to tee this up or should I go straight to Christian?
Yeah, a couple of words if I could. This is the annual opportunity for your independent auditor to provide their opinion of the town's finances. This is both for the town and the school. That's why the Board of Education is assembled with us, or representatives anyway. I must apologize publicly for the tardiness of the audit this year. We had some challenges internally. And I must also compliment Mr. Smith and his staff for being very quick in terms of turning that around. So in the end, we were able to deliver the audit in advance of the budget discussion, which in my mind is the most important. So we have a firm understanding of our financial position before we start talking about another fiscal year. I think we've made some internal changes to make sure we're back on track going forward. And that includes using the same auditing firm for next year, but we have committed to a full RFP process to select auditors going forward, which is an appointment of the council, of course. So you'll be involved in that effort. So with that, we do have Christian Smith here. Happens to be a town resident, just as an interesting side note. But Christian's been involved for quite some time doing the town's audit and is here to share his thoughts and findings with you.
Ms. Smith, do you have screen sharing capabilities there and do you need them?
Let's see. I do need them. I have slides I was going to run through. I'm looking for the button to share the screen. I'm not seeing it at the moment. Oh yes, it looks like I do. Yeah.
Okay. So with that, I'll turn it right over to you.
Okay. Thank you. Yep. I will. Let's see. I'll press the button to share my screen, and let's see if I can get PowerPoint slides up and running here. Slideshow. Let's see from the beginning. I think. All right. So this should be. Yeah, so I think it's working. All right, thank you for having me. My name is Christian Smith. I'm a partner at Whipfly. We have offices in South Portland, Maine, Augusta, Maine, Bedford, New Hampshire, and we service the town of Scarborough, mostly out of our South Portland office. So I always like to start off with just making sure everybody understands the relationship that the town and the school department have with the auditors. We are independent auditors. We work for the council and the board. We work with management to perform the audit. And you've hired us to express an opinion on the financial statements. And the financial statements are management's responsibilities, is management's responsibility. And you've pretty much hired us to express an opinion on the financial statements. So, the result of our opinion this year, as it has been the same in the past, is what we call an unmodified opinion or a clean opinion. Which means that the financial statements are fairly stated and have been presented in accordance with generally accepted accounting principles. So as part of that, you follow what's considered the Governmental Accounting Standards Board accounting standards. So you'll see throughout the slides that I have that we've kind of cut and paste parts of the financial statements, hopefully to make it a little easier to follow along. but this would also give you a point of reference of where the information is coming from. So, our opinion on the town's financial statement does show up on page 17. And here you can just kind of see the standard jargon, the language, which basically says that, we have, provided a clean opinion on the financial statements in all material respects in accordance with generally accepted accounting principles. And so that's the highest level of assurance that we're able to give.
Hey, Christian, I'm sorry to interrupt you, but most of us are looking at a screen. It's hard to see. Can you put that in presentation mode so it's bigger on, I think it looks great in Zoom, but I'm the only one that has the advantage of looking at Zoom right now. So
Okay.
if that makes sense.
Presentation mode. Let's see.
If not, it's fine. I see 5 counselors squinting because we can't quite.
Okay.
Oh, okay, that's fine. Then does everybody have it in the agenda packet? All right, never mind, Christian. We're following along here. We're all set. Okay.
Okay. Yeah. Okay. I'm sorry. Well, it might be easier when I get to some of the other slides because there are some numbers on some of the slides, which would be easier to point out if I can kind of run my cursor across them. So I wouldn't mind if I could, if I just change my swap presenter view.
That's what I was looking for. Perfect.
Is this, okay, this is it? Okay, good.
Yeah.
Okay, great. I clicked the button and I got lucky. All right, so this next slide just kind of just gives you an overview of the different reports that we issue. We do issue quite a few different documents, and I'll give you a summary of the results of those documents as well. But we issue what we call a required communication letter, which is our communication to you about how the audit went, covering both the town and the school department. So of course, we do issue the separate financial reports for the town and school department, a separate set of financial statement for each. We're also required to do what's called the single audit or uniform guidance audit in a data collection form, which covers your grant programs. And so based on the nature and the size of the grants that the town and school department have received, the HIDA grant is one that we have to test every year. So we've tested that grant program and there were no findings. That probably will change next year with all the significant CARES Act money that's come in. We will probably be auditing that money. We're also required to issue a report to the State of Maine Department of Audit, a procedural form that tells them how the audit went. Clean, that was again a clean report. With respect to the school department, we are required to submit to the State Department of Education what's called the MEFS. It's an upload of the financial data, the school's financial data. We have to certify that that what was uploaded to the state agrees with the records that we audited and that there were no issues, and also compliance with the Maine School Finance Act. And so there was no known non-compliance with any of the laws and regulations with respect to the Maine School Finance Act either. So this next slide just kind of gives you some of the highlights of what's in our required communications letter. So some of the bullet points in here are that we had kind of no significant difficulties dealing with management, performing and completing the audit. Certainly Tom did mention, it was later this year than usual. But, in regard to performing audit procedures, there were no other real difficulties. If there were corrected or uncorrected misstatements, they would be listed out here. So there were no audit adjustments as a result of the audit. And then there were also no what we would call proposed adjustments. So that would be if we didn't agree with the accounting in one area or another, or found a mistake and management didn't want to book the entry or didn't agree to book the entry, it would show up as an uncorrected misstatement. So there were none of those either. And then there's a section about disagreements with management, and there were no disagreements with management regarding any sort of financial accounting, reporting, or auditing matter, or accounting practices or anything like that. Does anybody have any questions so far?
I don't see any.
If not, I'll move on. So also like to cover if there are any management letter comments. So there are 3 different levels of different levels of severity for management letter comments. Material weaknesses and significant deficiencies are generally a little more concerning because they do signify that there is, something that could affect your financial reporting and could be a problem with your internal control. We don't have any material weaknesses or significant deficiencies. And then sometimes we'll also have some best practices recommendations as well. So we don't have anything to report this year either with respect to any of the categories. So there were no significant deficiencies, no material weaknesses, and no best practices recommendations either. School department, same situation, no recommendations either. So it was a clean audit overall. So this next slide, just the financial report does have a lot of information in it. It's a very long report, so I feel like it's a good idea to give you an idea of as to what an overview of the information that is involved and included in the report. So the transmittal letter, that pages 1 through 10, that gives you a really good overview of the dynamics about the town. It gives you information about the population, demographics, business demographics, major things that are going on with the town that are not necessarily all financial related. And it's required as part of a certificate of achievement for excellence in financial reporting. And this is the 15th year that the town has received that award. And there's only a handful of towns in the state, towns and cities that do receive that award. The independent auditors report, which I mentioned, pages 17 through 19, it's an unmodified opinion. Part of the financial statements as well, what's called the management's discussion and analysis. So that's pages 23 to 35. And that is supposed to be a more easy to read summary of the financial results. It gives a lot of comparative data in summary form. There's a lot of good charts and graphs in it as well. Most of the focus is on the government-wide financial statements, but there are also some schedules in there that cover the budgetary basis and fund financials as well. And again, this is supposed to provide a highlight so you can read these pages, and when you're done, you should really have a good idea as to what were the major financial transactions of the town and how's the town doing? How's the town's financial standing? So part of what's required with the GASB 34 financial reporting model, there are actually 3 separate sets of financial statements, if you will. So pages 39 to 40 is what's called the government-wide financial statements, and that's a full accrual basis. So in those statements, you're going to see the cost in depreciation related to your buildings, your roads, your school buses, public works equipment, et cetera. As well as all of your long-term debt, pension liability requirements, post-retirement healthcare liability estimations, and things of that nature. So that's supposed to mirror what a financial a business financial statement would look like. So also within the financial statements are the fund financial statements, and we'll look at a page or two that covers that. Pages 41 to 42. This mirrors more what your internal books looks like. This is going to make more sense to you, I think. But that's basically, everything's kept accounted for on a fund level. So you've got your general fund, and you've got your other major funds, including the public safety building construction and grant funds and things like that. So there's also a budgetary basis report, which is comparing your budget to actual. So I'll have a slide on that as well. That'll kind of show you the results for that. Page 44, that's considered modified cash basis. And then the town has a number of fiduciary funds. There are, the student activity funds that the kids raise money for. That's included in the financial statements, as well as you've got scholarship funds and other just general trust type funds that are for the town's benefit. And then there's a whole lot of footnotes and supporting schedules that support the basic exhibits that I've mentioned above. Just to get into some numbers here in another minute or two, but also, sometimes there are new accounting standards. There was a new one last year, nothing new this year. So everything that is presented, I would say, is completely comparable to last year with no real changes, nothing new and exciting to talk about. So effective June 30, 2022, there is a new standard it's only going to affect the government-wide financial statements, but basically it requires the town to capitalize and reflect the liability related to leases. And so that would be if, if the town's the leasee for, say, significant buildings or equipment, it goes on the books as a liability. There's no such thing as a off balance sheet lease anymore. That's the result of this standard. But also, if you're the leaseor, so I don't know, the town may have some, land leases for cell tower rentals, those kind of things. Those go on the books too as an asset. So that's something that will need to be considered going forward. But based on what I know now, I don't believe there are really significant leases out there, either as a leasee or a leaseor. And it depends on materiality too, whether or not this is, if it's significant to the town's overall financial statements. But that's something that we'll look into.
Christian, I had a question here, a couple of broad questions, if I may, Mr. Chair. So I'm always fascinated by auditors' reports because of the disclaimer statements. Sometimes they tell me more about what you are not accountable for than what you are. I mean, maybe that's just sort of the nature of the beast. But in your section here on page 17, you talk about, you're looking at the internal controls and you're confirming that the presentation of the financial statements are fair, but you're not expressing any opinion on the effectiveness of the entity's internal controls. So you don't do that as an auditor. Where would we go to kind of get someone to tell us about that?
Well, yeah. So as part of the audit, we are required to obtain an understanding of internal controls in order to plan and perform the audit. And so that helps us with our, risk assessment. It helps us with our overall audit plan. So we do get an understanding of internal controls, but you're right. We do not express an opinion on the internal controls. That would be an entirely separate engagement. That would be a much deeper dive, like for someone to actually express an opinion on the internal controls. Maybe that, it's similar to what, say, a public company would get when they have a Sarbanes-Oxley, a SOX audit. Right. Which is required for large publicly traded companies, but it's not required for non-public companies or nonprofits or governments.
So, and I did have a follow-up question. That's helpful. So we know that you do offer that service. I think at some point that might be worth, and I'm not on the finance committee, but it might be worth us taking a look at that to evaluate what our internal controls are and what should they be and what the gaps, may be, if any. It's interesting to me you didn't have any recommendations. So I wanted to ask you, and for either the town or the school's financials. So I wanted to ask you about that. And if you could say, A, how common is that? And B, when was the last time you found recommendations and what were they?
Mm-hmm. Yeah, I mean, it's fairly common. I mean, we try not to be, we don't look for comments just to have comments, that's for sure. But I mean, we when we're doing our audit testing and our control testing, we look at samples of expenditures, making sure that the purchase order is completed. We make sure that it's been signed off, the invoice has been approved, payments are right, who you paid is, it's an appropriate expense, appropriate payee. And so, we do a number of control tests for that regarding payroll, expenditures, revenues, and other just general accounting, just, kind of looking at reconciliations to make sure that they're complete and accurate. So, I mean, we do look at a lot of different areas, and there are certainly opportunities for us to identify things, but, I guess in the past, I think it's probably been, I want to say maybe 3 or 4 years since we've had some comments. In the past, there have been some comments about maybe updating policy and procedure manuals. There were some policies and procedures that were either were outdated, or maybe we found that the practice wasn't being followed. So it was a question of, well, if you're not going to follow the practice and you've got a policy that talks about it, maybe you ought to consider whether or not the policy is still appropriate. So I can remember some things in the past regarding policies and procedures. There have been many years ago, there were some issues with the accounting for depreciation, and that's been rectified. The school department has had some, in the past, we've had some issues with the collection of cash receipts at the school lunch program.
Okay.
There wasn't adequate documentation there.
Thank
Sometimes
you.
there, student activity funds can be places to find things as well.
Thank you. I'll have a follow-up later on that point, but thank you.
Okay, sure. Okay, so now I think we'll get into some of the numbers here. So I've got a number of slides that are just going to, in graphical presentation, provide you with some of the historical numbers and where things stand. So here you can see this is the town's fund balance for the past 3 years, and this does include the school. So this is everything, town and school combined. So you can see that the fund balance this year increased by, I think it was about 790,000 or so, from a little bit under 14.5 million to 15 million. And so you'll see in some of the future slides, you'll kind of see how the breakdown of what that is, as far as town and school, and other some other information about that as well. So this, kind of always, people always like to say, oh, how do you compare to some of the other local communities? And we could look at a lot of different communities. I mean, certainly Scarborough has a larger budget than Falmouth and Cape Elizabeth. South Portland has a larger budget than Scarborough. But these are all local communities that are in our area, and where do they stand? So the town is at, basically this is your unassigned fund balance as a percentage of your budget. And the town is at 8.81%. You've got an internal policy that, for this percentage to not be less than 8.33%. And then once it's above 10%, you've got some criteria where you can allocate some money for debt service, capital expenditures, that kind of thing. So you're within your policy, and that's the most important thing. But you'll certainly see, I mean, Falmouth is at 30%. I think theirs went up by 10% this past year, significant increase there. But Cape Elizabeth and South Portland, I think, have been steadily around 10 to 15%. And
Just here's my follow-up question. It does
Yep.
tie back to that other question I had about
Yep.
no recommendations. So on this one, I mean, I know that we achieved the fund balance goal of 10%, but consistently we're below that. We're near the bottom of it, 8.81, 9.81. So why would we, if we consistently fall short of that policy, why would that not be a recommendation for you to change the policy or to somehow change performance?
Well, I mean, I believe you are. I mean, Ray, I would say you're definitely within your policy, because your policy is to not be less than 8.33%. And so you're above 8.33% right now. And so, but once you hit the 10% criteria, that's when you start to allow yourself to allocate funds to other activities. So you've always been, I'd say, consistent with the policy. And, as a rule of thumb, people always ask, well, how much should we allocate? How much should we have in an undesignated fund balance? Or unassigned fund balance. And, the rate, that's really more of a discussion that, management probably would have with your, the bond rating agencies. But, as a rule of thumb, they've always said, well, 1 to 2 months. And that's probably where your 8.33% comes from. So most towns I see, anywhere from say 8 to 16% is kind of the range of their policy.
Okay, so it just may be a personal pet peeve of mine, but it does seem to me if we have a goal of 10 and we're constantly bouncing off the bottom of the ocean floor at around 8%, but we're not falling below that maybe we need to reset our target or reset how we approach that goal. I don't know. That's just me. So, and this is not new news. This is kind of an issue that we've had for some time. So thank you.
If I could, I think perhaps our financial advisor might have more particular advice in that regard than our auditor. It's worth noting that, the way that fund balance is created largely is through levying property taxes. And so I would suggest, I don't mean to be critical of my, other communities, but it strikes me that 30% fund balance is
So
more than is necessary in the event of an emergency, if you will.
Yep. So my only response to that, Tom, is that so in these times where we've got stimulus money and in a year, in fact, if we got to 12% of that, we'd be able to do things like address non-spendable restricted accounts that offset unfunded liabilities. We'd be able to fund capital expenditures, to retire debt, to refund taxpayers. So I'm just, going to kind of plant a seed here that if we're in a year where we have an influx of money, wouldn't it make sense for us to try to get that number for the percentage of the unassigned fund balance back up there so we could start doing a few of these things that actually, would provide relief for people, but particularly people who may not have been direct recipients of stimulus funding. So that's my point on all of this, but thank you for your input.
Yeah, the pressure point is tax rate. Scarborough has developed a culture that they really are very careful about minimizing tax rate increases. And that's why I think we've never been able to build fund balance in a significant way, because we've been mindful of keeping tax rates as low as entirely possible.
Thank you. Thanks, Tom.
All right, thank you. So this next slide, hopefully you can see this okay. So this is, we were talking about fund financial statement. This is one page of the fund financial statements. And so the part of this that I was gonna, that I kind of wanted to point out is, I don't know if you can see my mouse here, but the lower left-hand corner of the general fund column, that provides you with that there are different components within fund balance. And so we stated that you have a total of 15 million in fund balance. And then you saw the percentage that we provided in the last slide. So that percentage is based on what's called the unassigned fund balance, which is this bottom figure, 7.7 million. And so that's basically money that's, hasn't been earmarked for anything. It's available and can be used for any general purpose that the town so decides. But there are other categories here as well. So, there's a portion of fund balance which is restricted, which is 2.9 million. And that basically is kind of covering the interfund loan payable, or the deficit, if you will, with respect to Higas Parkway. And then there are other buckets here as well. There's we show education as its own line as both being restricted and assigned. And then there's a pretty large pool here in what's called the assigned general fund. And most of that are carry forward amounts. So there are some, when the budget is unspent in one year, you can carry forward amounts into the next year. And so that makes up a portion of this number here, as well as there's some money set aside to cover accrued sick pay obligations for when people retire. So just wanted to make everybody aware that, out of the total fund balance, there are different portions of it. And, probably the piece that, that I would make note of that everybody's aware of is the portion of fund balance that has been dedicated or set aside for next year's budget. So within this $2.6 million number for the town, there's $400,000 that has been set aside or is being used in the June 30, 2021 budget. And the school has, as it has every year, and as the town has every year, has committed $700,000 of their fund balance to cover the June 30, 2021 budget. And so that's an annual, annual part of the budget to take part of fund balance and offset the taxes in the next year. But just also wanted to point out as well here too, you can see, we've got the public safety building as its own column. And so that the public safety building is complete at this point, but that's showing a deficit of about $1.8 million as of June 30. And then I think in the footnotes, we talk about how that's going to be funded with, to cover that deficit. But there's also other governmental funds as well that are all kind of collapsed into this one column. And so that's where you're going to see various, other smaller size construction activities, school grants, and things of that nature are all kind of collapsed into this column here.
Christian, if I could ask you to hold there for just a minute. I know this is sort of a content question, so as opposed to maybe a process or a purely an audit question, but I seem to recall that number was the last time we reviewed the deficit for the public safety building, it was somewhere in the neighborhood of 500,000. Now, is this is the total cost, or how do those two numbers compare?
Yeah. Well, so let's see. Yeah. So as of, this is a snapshot as a point in time. So June 30, 2020,
Okay,
you've overspent. You overspent the funds that were raised from the bond for the public safety building by $1.8
Yep.
million. So that's basically what that's showing. As of June 30, 2019, you still had about 10.5 million left to spend. So it wasn't as far along.
so was that the final number, or is that, where did we finally end up on?
Oh, I'm sorry. Okay, I guess the final number, I guess I'm not sure about that because I'm thinking that probably transpired
Maybe a
sometime
question
after
for
June
Tom,
30.
but
Yeah, we've just actually paid the final invoice last month, so we're in a position to report out. Remember, this is as of June 30th at that
Right.
point in time. So,
okay,
yeah, I owe you a final closeout on that project. But I would have come back to you had I needed more money. That was one conversation we had about reconciliation. And the good news is I have not been back to you when we paid the final
That's good
invoice.
news.
So,
yeah,
Good.
I thought it was a timing effect, so thanks, but it would be good to net it all out at some point when we have the
yes,
final
for sure.
accounting. Thank you.
Could I just ask a question of Christian on the comparative fund balance? Christian, would all communities use the same measure? We use the unassigned portion of fund balance for our personal reporting. Is that true of all communities?
I think that's generally true. Yeah, it is the
Okay.
unassigned. That's the standard.
Okay, good. I just want to make sure it was truly comparative, that there wasn't additional categories that some communities by policy chose to include in that calculation. Thank you.
So can I ask you a quick question on the 1.8 million on the public safety building? So Tom, you were saying you didn't come back and ask for more money. I can't remember where we took that money from at this point. but-
Betsy, we can't hear you.
Oh, you can't hear me at all?
Hold on, Betsy, I'll fix it. The volume on my computer is down. Let me just find the volume button. All right, Betsy, go ahead.
Yeah, so is this better, Don? So just stop me if it's no better, and I'll just save my question for another time.
We can hear you.
Okay, so if so we had to do reconciliation. I think Don was saying of somewhere in the tune of 500,000. I can't remember. It might have been less than that. But it seems like we overspent by 1.8 million from what we bonded. So was that made up in some of the other ways that you were talking about, Tom, in terms of some reductions you did and some discounts you got, or so how does that reconcile between what we made up and what it's showing here by June 30th?
Yeah, I'd have to bring Ruth in. I'll have to bring Ruth in, but I suspect it's any number of components. It could be other revenues that we were counting on to help cover those construction costs. It also could be the fact that we have an additional final bond issue related to that project that we haven't actually executed.
Oh, okay.
So it's really a matter of timing, and
Okay.
we do owe you a full and complete closeout of the project.
Okay. Yeah. So it's timing. All right. Thank you.
Yep.
Ruth, does that answer it, or did you want to follow up?
I did what, can you hear me?
Yep, yep. I just caution everybody on time. We do have to get through this. And so you have to stick to the scope of the audit at this point. So,
Yeah, the only thing I would say is that part of that $1.8 million deficit will be relieved because we sold the public safety building, the old one, and that money doesn't reflect until FY21.
Okay. That makes sense.
perfect answer. Thank you, Ruth.
Thank you.
Thanks, Ruth.
All right, Christian, you may continue.
All right, thank you. Yes. So yeah, the next several slides just kind of show some trends, so you can just kind of see where we've been. Property taxes for the last 3 years, 65.4 million in 2019, 67.7 million in 2020. So obviously this is just a function of the total town budget necessary to meet service demands. Other significant revenue trends for the past 3 years. I just tried to pick the three other largest. Excise tax collections have been really good for a number of years, in excess of $6 million. Continues to rise. State education subsidy has actually increased after many years of decline. So that's over $3 million now in the most recent fiscal year. So that's was certainly a good result for this past year. And state revenue sharing, that's also up as well, over $1 million now in the past year. But it's hard to say how long that will continue. Next, I'll just get into some of the expenditures, significant expenditure categories, just to see where we've been. Education budget is the largest budget of the town, largest budget category of the town. Total education expense was 49.8 million in 2020. And I did just kind of want to just clarify that this is on a budgetary basis. And sometimes we do this presentation and, the number, if you look at the number on the fund financial statements, it's actually higher by like 4 or 5 million. And that's because of the accounting for state contributions for pension, which don't get reflected in the budgetary basis. But as far as the taxpayers go, the taxpayer commitment for the education budget is 49.8 million in the past year. Other categories as well, again, within the general fund, public safety is the next largest expenditure, 12 million, slight increase there from the prior year. Public works actually declined from 7 million to 6.3 million. And then the debt service went from 5.6 million to 6.2 million. So, and I also would like to point out, with respect to the debt service, this does not include the school's debt service because that is included in the school's budget. So that's an additional 5 million or so on top of the 6.2 million that you see here. The next page just shows a summary of the budget to actual, which is page 44. And this is the page that probably most people focus on. So budget to actual for the general fund. You can kind of see that the total revenues were short of budget by about $1.3 million. Most of that is comprised of taxes. There was, let's see, property taxes were down about 690,000 this year compared to budget. Excise taxes were up 170,000 compared to budget, which offset that. The unclassified category, most of that is community services. So that their revenue was down almost 700,000 this past year compared to budget. But on the plus side, expenditures were less than budget by 4.6 million. And that makes up a lot of the reason why we have a positive increase in fund balance for the year. So for the year, if we're looking down here, the column, this middle column for actual, you could see the net change in fund balance on a budgetary basis was an increase of 776,731. So that's where we get from a fund balance of 14.3 million last year to a fund balance of 15 million this year. And if I, you'll see it later when I look at the school financial statements, but the school actually had an increase of a fund balance of almost 800,000. So if you kind of split it between the two, the town's fund balance for the year was pretty much break even. I mean, it went down by about $20,000 or so, and the schools went up by 796,000. So that's kind of where you can kind of see how that played out.
So Christian, just really quick, I think you already said that, so I just want to make sure I understand it. So the debt service on page 44, that doesn't include the school, that's only the town because the schools has to be included in their budget?
Correct.
Thank you.
I mean, if you were to look at the footnotes in the financial statement, that provides you the total debt for the town and the school, everything combined.
Okay.
But for budget presentation purposes, it's got to be based on how it was budgeted.
Okay.
This is the last slide I have for the town. So I'm going to be into the school department next. I don't know if there's any we can wait to do questions at the end, or I can just I can carry forward if you'd like.
Christian, just because we have 25 minutes left, I think you should carry it forward and make sure we get to the school.
Okay, sure. So similar to this first slide, one of the first slides I had for the town. So the town's the school's financial statements are different than the towns. There's a lot less detail to them. But we've issued an auditor's report. Pages 1 and 2 of that financial statement is an unmodified opinion. There is an extra paragraph in there that says, we're not presenting a management's discussion and analysis, which is not, it's not a qualification of our report. It's not really necessary or required, considering that we're issuing what we call a fund financial statement for the school department. So technically the school department doesn't own the assets. It doesn't have the debt. The town does. And so that's why we only do a fund financial statement presentation for the school department. So within the school's financial statements, pages 3 and 4 are what's called the modified accrual basis fund statements. We've got a budgetary basis schedule for the school as well on page 5. And fiduciary funds, so that's going to be student activity funds and some scholarship funds, are on pages 6 and 7. And there's a number of footnotes to support the school's financial statements as well. And again, here's our slide on the opinion, page 1 of the school's financial statements, basically stating that the financial statements are fairly presented in all material respects in accordance with generally accepted accounting principles. So clean opinion for the school as well as we would hope. So the next slide shows the general fund budgetary basis fund balance for the last 3 years for the school. So you can see after a decline from 800,000 to under 600,000, this year was an increase to about 1.3 million. And so there was a good increase in fund balance this year, and you'll see that on some of the upcoming schedules where the savings were, mostly in expenditures. So here you can see, here's a similar slide that we looked at before. Here's the unassigned fund balance for the school department as a percentage of budget. So the school department's only at 1%, which, if you recall, we've talked about this in the past. The State Department of Education has a rule that says you can't have more than 3% of your unassigned fund, 3% of your annual budget as unassigned fund balance. Otherwise, the state's going to expect you to start using that and reducing your local taxes and using that money, or they're going to cut your state subsidy. Never seen them do that ever. RSU 21 has been, you can see that they're really high. They're almost 9% this year. They've jumped right up. They were at 10% plus a few years ago. But this, the state will give you 3 years to work it down. But most schools we work with are running pretty lean, I would say. I mean, you can see the other two that we're working with, Sanford and Emmett City 17, are about 2%. Westbrook's actually at a deficit. But staying at 1% is within the 3% range. So you don't really have a whole lot of room to move. And like was mentioned before, it's really it's really the board and management's decision in terms of how much fund balance do you want and how much do you want to raise taxes. There's a balance there. So this next slide just shows you the unassigned fund balance, kind of right here in the lower left-hand corner. As we mentioned before, there's about $1,350,000 of total fund balance. $700,000 of it has been set aside or assigned for the June 30, 2021 budget, and the remainder, almost $650,000, is available for just general purposes. So that's the 1% calculation was based off this $650,000 number. And then similar to what we looked at as well for the town's financial statements, we have separate columns for non-major special revenue funds, non-major capital projects funds. There aren't any individual grants or projects that are significant enough to show by themselves. I've got another 2 slides. I'll have the budget report, but I don't know if anybody has any questions yet.
Yeah, sorry to interrupt you, but on your slide 22, what was the basis for the peer group here that we're using for looking at the school unassigned fund balance as a percent of budget?
Okay. Yep. Well, one, that they're easy access to information because they're all clients of mine. And two, that similar budget size. All of these communities have budgets that are comparable in size to the town of Scarborough School Department. So in the 50, I think $45, $50 million range.
Thank you.
Next slide here just kind of shows you what the more significant expenditures are for the school department. Regular instruction's the largest piece with 21 million. Special ed increased from 8.2 million to 9 million. And then the debt service is its own category for the school department. That declined from 5.7 million to 5.2 million. Let's see, this is the last slide I have for the school department, the last slide I have for the presentation. The budget to actual presentation. So for the year, you can see that revenues were short of budget by about 268,000. Total expenditures were less than budget by about $1.8 million. So that results in a positive variance for the year of $1.5 million. So, over here in the left-hand column, you can see as part of the budgeting process for June 30, 2020, it was planned to use $350,000 out of fund balance. However, you actually achieved, $1.2 million to the positive. There was money transferred out to other funds to cover, deficits in like food service program or capital projects, et cetera, which offset that, which results in the $800,000 or so increase in fund balance for the year to arrive at the $1,348,000. And this is definitely consistent with what I've seen at all the schools we work with, is that, definitely as a result of the pandemic and the shutdown, there was cost savings, there was operational savings as a result of that. And people were able to hold the line and not spend money and put away some money. Any further questions on that? That is the last slide that I have.
Any questions from Councilor Cucci?
Yeah, Christian, it's a bit of, I guess, minutia, but I'm curious, in prior annual statements, we used to have non-major special revenue funds. A subset of that was the other impact fees. And they itemized the school development impact fee, Dunstan Corner impact fee, Oak Hill, and Haggis Parkway. And this didn't happen this year, it was last year, but it seems like the school development impact fee dropped out of that category. Do you know where it's now being captured?
Let's see. Let me pull up the school's financial statements. Is that the impact fee is on? That's actually on the town side, isn't it?
It's a non-measure, yes. Special revenue fund.
Yeah, I mean, well, so yeah, there's a calculation for it to meet the criteria of being a separately reported major fund, and it's got to exceed the either any of the categories of assets, liabilities, expenses, or revenues has to exceed 10% of basically what the total town-wide numbers are. And so it may very well have been in that category a bunch of years ago, but it has dropped down. I mean, I'm looking at other impact fees on page 100 of the financial statements, and I see a fund balance of about $1,642,000, if that's the one that we're referring to.
Ruth, Ruth wanted to jump in real quick. So Ruth, do you have something to add?
Yes, I was just going to say that those, which is essentially what Christian just said, is all of those different types of impact fees are under that one column called other impact fees. So they're all consolidated into one. It's mostly because of the real estate of the paper that we can't list them all.
Okay, so they're still in the same place. We just don't identify them as being there.
Correct.
Okay.
But we can. Oh, sorry, Ruth, I just cut you off. I'm sorry. Go ahead, Ruth. I'm sorry.
I think she was going to say we can provide that.
Yeah.
That detail,
We
which she
can
has in the
provide that.
past as well. Yeah. Thank you.
Any follow-ups, Councilor Cucci, or was that what you had?
No, that was it.
Anybody else at the table? Councilor Hamel, just put your mic on there.
I just had a general comment about timing. I know that we had a COVID year or so, but this is, we're going through financials for the past fiscal year, almost a full year later. So, I just, what's it going to take us to get back on track, and what's a reasonable expectation to have for timely financials? Because even in past years, we've been more in the 3 to 6 month range than we have been in the 0 to 3 months. So public companies typically do it in 3 months. So I know we're a different beast, but can you help us with that?
I think that question is probably better placed to staff, frankly.
Right.
The auditor is in a position to support us based on our schedule. And we were the ones lacking this year. Our town charter does require these financial statements and audit to be provided by the end of the calendar year. And so clearly we were well over that deadline. So I think your question or And our comment is better directed at staff and our inability to get the material to the auditor. It's not a function of their ability to turn it around.
So, yeah, I appreciate that and, accept that, understand that. The question I have is what should the target be? I mean, is 6 months reasonable or, is 9 months reasonable? 3 too soon, 9 too much? I mean, as we're in an effort to try to get back on track with it. And I think that generally what's happened is that when we don't look at financials very often, it's hard for us to really follow the bouncing balls, or follow the black and red deltas, so do you have a view on how we might get back on track? Thanks. Tom or staff or Christian.
Yeah, from staff's perspective, I think we do need 6 months to be able to kind of close out the year and provide the material. I can't imagine it doing any sooner. I think that's a reasonable target that we need to adhere to. I'm not sure if Christian has a perspective, a wider perspective in terms of other private sector, public sector clients, whether that's a fairly typical timeline.
Yeah, definitely. I mean, it's, maybe the first one, we do get some out in October, but really the big push is November, December. It's definitely not, there's nobody getting them done in 3 months. That's for sure.
Great, thanks. Thank you.
Don, I just piggyback on that. I think this year for me being on finance, receiving the report the day that we go over the budget is overwhelming. It's a lot of data to kind of try to take in at once. So I think it would be extremely beneficial to the process if we can get at least close out 2 years ago with some leeway before we enter the process. I think that would be a great step forward.
Councilor Geisting?
So Christian, I feel like you answered this, but I feel like I didn't totally understand it. I wanted to ask it again. So COVID being so strange, especially the schools received grant money and they will be receiving grant money in different periods coming up. So will that all be accounted for differently? Not in this, because we've had a lot of residents ask, well, what about all the grant money? That's going to be completely separate from the budget and kind of live on its own. How's that going to work?
I believe that is the case. I mean, I'd be honest with you, I haven't really, with all of our towns and schools, all of the money was received after year end. And so we really didn't deal with it much, but for what had come in, what I had seen, it was treated just like, it would be like a Title I grant or a local entitlement grant where it's separately tracked, because there's definitely going to be some, specific criteria that you're going to have to meet to use the fund. So I do believe it is going to be outside of the budget. And, maybe Kate might have some insight on that for sure too.
Heard that from the school department too. So I just, as people start looking at this information, but will you have it in the audit?
What, I'm sorry, will
you include it in the audit though? Will it be in there even though it's separate?
Right. Yes. Yeah. I mean, I guess it depends. It depends on how the numbers shake out, but I mean, yeah, that detail is in like the for all of your different grant funds, that details in the very last 4 or 5 pages of the school department's financial statements. And it's also when there's a supplemental schedule in one of the pages of the town's audit as well, that shows all of the school's grants. So that detail it's included in there. The detail's in there. It's part of the special revenue fund. So definitely you'll see it there presented. So you would see the activity. I guess, and I was thinking more along the lines too, if we don't really go over the uniform guidance audit, but I'm expecting that money's going to require specific auditing under the Uniform Guidance Act as well. So it'll be covered in a separate report as well, saying, hey, we specifically tested the expenses for this, and was it properly utilized? Was the money drawn appropriately? Those kind of things. Was the reporting done correctly? So that's a whole separate set of tests from the financial statements. But
thank you.
Any others? No? I'm going to relieve Christian of his duties then. Thank you, sir. Much appreciated.
Thanks, Christian. Thanks very much.
Thank you. Thank you all. I appreciate being able to work for the town. Thank you.
Thank you, sir. I have to jump on another Zoom link to start the meeting. So take a 5-minute break. Councilor Gleason, you just need to go jump online and grab the other agenda link, okay? Because it's going to be a different Zoom meeting. And this way it breaks up on YouTube, so it's a little easier to access for everybody. So with that, I'm going to end this Zoom and I'll see you guys back in a couple minutes.